is Tuesday, the 11th of August. I am Bosin Omofaye. Let me welcome our panelists this morning. Joshua Odebisi, banking analyst at Vectiva Capital Management in Lagos. Good morning, Joshua.
Good morning.
Great to see you. Ayodeji Ebro, who is also the CEO at Afrinvest Securities, is also joining us from Lagos. Ayo, it's good to have you on the program once again.
Good morning.
And as always here from the East African markets, Ali Kansacho, CEO and founder at Rich Frontiers Management. Good morning.
Morning. Good to see you, Bosin, as always.
Thank you. Thank you. Hope you all had a very nice night. Let's get the show started. Not particularly a shining Monday for the a number of African equities market from Nigeria, where the market lost about 0.1%. Ivory Coast was down, but much bigger. The Egyptian market knocked off 0.22% off its index. The Kenyan market was down 0.28%, and the South African GSE 1.56%, the biggest pullback among the other big exchanges within the continent. But speaking specifically to East Africa, the unclaimed shares, according to the authorities in charge of that in Kenya, says that's about 800 million shillings. In Nigeria, unclaimed dividend runs into several dozens of billions of naira, taking several years trying to clean that up, with the authorities still trying to wrap their heads around that. Meantime, the central bank in Kenya extends the treasury bonds maturity to 7.8 years, and earnings from the Muruti says the company says 11.1 million Kenyan shillings was their pre-tax loss in the first half of the year, despite Kenya reporting an impressive tea export within the first half of the current year. Uganda Central Bank left interest rate unchanged yesterday, 7%, after two previous rate cuts earlier in the year when the pandemic and the lockdown materialized. July inflation, Rwanda in at 9.2% and Tanzania 3.3%. I'm going to ask Ali to speak to the unclaimed dividend, but I just want us to give a bit of a background to it from the Nigerian perspective. Ayodeji, give us 1 minute on this unclaimed dividend and unclaimed shares within the Nigerian space. I'm sure this one problem we'll spend years trying to wrap our heads around.
Thanks for this very wonderful question. And it's one major factor that has been dampening investors' interest in the market. So it's really looking at the process. So, and with the advent of technology, we believe that even the stakeholders, the registrars, the CSCS, the NSC, the Securities and Exchange Commissions, need to fast track this process. They need to come together, sit down and see how it will be fast tracked. Just to put a bit of context, currently, if you buy shares on this floor of the Nigeria Stock Exchange, you will be, for you to get your dividend, you'll be asked to fill what you call an e-dividend form and also do an allotment. These are hard copy that you need, the client needs to sign and it will be sent to the CSCS, and CSCS will forward to the registrar. And we've looked at it over. We've looked at it, and you look at what information do they require. At the point when you are opening your CSCS account, you can request for that same information as a new investor in the market. Request for that same information such that the information that is required at the point of coming into this market is forwarded to the registrars that will pay you your dividend. Your BVN is requested, your bank details are requested beyond the signature. But with your BVN, I don't think we also need to go through the route of signature. So we continue to see the accumulation of unclaimed dividend. But on one hand, the SEC is trying to come up with a policy to reduce it, while leaving what we call the elephant in the room is that process is still very traditional, that we need to automate it. And as a result, it will reduce the leakages even for the investor. You are not able to capture your overall return because you have to fill hard copies of documents to claim your dividend. This will not go away anytime soon if we don't review that process.
Interesting. Joshua, where do we see much of the unclaimed dividends in Nigeria? I'm sure the banks will be among those with the heaviest figure.
You're absolutely right, Boasin. Actually, I personally have a lot of experience with this unclaimed dividends issue, and you know that the SEC set up a website where you can, go in and input your surname and some of your details, and it will show you, all the shares that you have unclaimed dividends in. And I know that that the role for unclaimed dividends is quite massive. And I know that a lot of these companies, especially the banks, have actually published their unclaimed dividend lists. The only issue is that, unfortunately, the process to go about regularizing or converting to e-dividends and all is not the smoothest. They've tried a few different things to make it smooth. Unfortunately, based on personal experience, I know for a fact that it's not that straightforward to simply go about regularizing your e-dividend claims. So if they can simplify the process even more, then maybe we'll be able to clear up some of the backlog. But I know that the e-dividends runs into the billions. And like you said, the banks, because they have been the ones regularly paying out dividends for the past decade, they are naturally the ones with, the largest amounts of unclaimed dividends, which are just sitting with registrars, really. And I'm always curious about what exactly those registrars, do with the unclaimed dividends that they have just
That
sitting
is just in their account. And again, the banks also have the largest number of shares in issue. So
yes, exactly.
Definitely, in those days, I'm sure Oceanic had about 30 billion shares in issue at some point, Intercontinental Bank in those days. So they're very huge shares in issue. Ali, what's the story about in Kenya? What's the development there? Is it does it correlate with the Nigerian experience that you've been hearing now?
So the numbers I'm hearing from you guys it seemed to be quite high. Here we're talking about an unclaimed amount of about $8 million, which seems to me light, given what I know from various people. So I think that number looks as if it's underreporting the amount of unclaimed dividends. But what has happened is 50% of our market cap is Safaricom, and Safaricom have a very progressive policy of paying the dividend across the mobile money platform M-Pesa. So I think in the case of our biggest company, they probably have the least held back dividends. So that has made a big difference. Of course, the second biggest portion is the banks, and I'm not sure whether the banks are holding on for a specific period of time before the unclaimed dividends go to the unclaimed authority, and maybe that's why that number is underreported. But here in Kenya, dividends are seen as a very golden thing. People look at it for income, and therefore it's really important that it gets transmitted effectively. Other stories you're talking about, Central Bank of Kenya, we touched on this yesterday. This is the extension of the maturity profile of the borrowing, and it's quite a significant achievement because it's in the context of a sharp increase in the total volume of borrowing. So I think this is pretty impressive from my perspective. Limuru Tea is a small tea company, big increase in production, but because of low prices, they were unable to serve up a profit. Limuru Tea is an interesting company. It's on the outskirts of Nairobi. Market cap is less than $5 million, but its land value is worth probably 10 to 15x its market capitalization. So at some point, I'm sure this will convert into real estate, I would imagine. Uganda held its interest rate unchanged. This is the issue we've been talking about. We've seen very sharp and deep cuts across the board, and I think now we're running out of road here. So I think that's what I'm taking away from that. Rwanda inflation up quite sharply, 9.2%. Rwanda's challenge is it's landlocked, and therefore if it's quarantined its economy, the supply of goods into Rwanda is probably partly correlated to that spike in inflation. And I think that's a consequence of the very hard lockdown which is now opening up. I saw yesterday a tweet from the tourism board that they are ready to welcome visitors into Rwanda. So I think we're seeing some loosening up of what was probably the tightest quarantine on the continent.
Interesting. Thank you so much, Ali. We'll touch on the South African market quite on unpleasant Monday, as it were, for the GSE and the rand. It looks like the gold and mining resources kicked the GSE Osher index by that margin. But within the Nigeria market space, the central bank official yesterday evening clarified the new healthcare R&D intervention, saying the program, it will be 220 billion, and that will be taken from this MSMEs fund. It will be a 2-year grant. So far, 34 applications for 90 billion naira so far, 90% of that from universities, research and development units. Herbal professionals are also bidding for this grant, which the central bank says will soon be disbursed. This is different from the 100 billion naira healthcare loan facility earlier provided at 5%, which of course about 50 billion, half of that has so far been disbursed. News that the Debt Management Office is resuming savings bond yesterday, since it was suspended in April at the onset of the virus lockdown. Total fixed income or papers traded yesterday on FMDQ 191.8 billion naira. Prestige Assurance, which is a small cap insurer, is opening its rights issue 13.6 on the stock exchange. So let me get Ayo Deji to comment quickly again on the side of this central bank intervention fund within the healthcare sector.
It's interesting to note that CBN has been playing a more robust role with all these intervention funds. I think maybe even the government have seen it as maybe a more credible platform to channel some of these funds rather than go through the fiscal authorities, because this is more tilted towards the responsibility of the fiscal authorities. So it's interesting to see that the universities are the major applicants or major beneficiary of this loan, because if you look at our educational system, research is really missing that depth of trying to, and it's as a result of funding. So I'm excited that most of our universities have begun to see that they need to also deepen that research. But there's always one concern about most of these intervention funds is the monitoring. We will need also that assessment, that transparency. Yes, they have received the funds, so maybe at the end of 1 year, there should be like an assessment of these universities. What are the new discoveries? Yes, discoveries may take years, but we need to begin to see that benefit, that impact that the fund is making. Also within the health sector, we need to also see how some of the major hospitals should also begin to also take advantage of this, because for us to reduce that medical tourism, we need a very strong and reliable hospital in Nigeria. So even the CBN would also be very positive to reduce that FX demand for medical tourism. So, but by and large, around the health sector funds, yes, it's a positive one. We are also believing that maybe the pharmaceutical companies too would also benefit from this, and because there's been demand for more supplements, multivitamins within this period, and they will need to also expand to meet up with that demand. And they can also identify some of those major drugs that we can produce that we import here, so that we can support it with funds.
Yes, actually, the clarification from the Director Development Finance was that this wasn't just for the COVID-19, but for other drugs that we can use in Nigeria, so that we reduce our medical tourism and reduce the dollar effects that we spend on importing some of these drugs from China, from India, from the UK and the US and elsewhere. But I was particularly enthused by the fact that the herbal medicine professionals in Nigeria were also among those who are stepping forward to say, look, we have research and development and we can do in this sector. But this money is coming from the MSMEs fund, it's from the central bank, and I'm not sure central bank is holding any money. This money belongs to the banks. Joshua, this is the money belonging to your folks within the bankers committee. So how are you firewalling this money? How do you think this money should be? Now we have two funds. The first was the 100 billion healthcare loan at 5%. This one is a grant, 2-year. A grant does not attract interest rates. But again, whichever way you look at it, there's no free money anywhere.
True. Well, I think if you look at it from the CBN's perspective, I guess, since they have been actively cutting the banks at their heels, really, and, restricting their ability to access FX. Obviously, they have excess liquidity sitting in the central bank that needs to be, allocated to sort of developing the economy in one way or another. And I guess this is the solution that they have come up with. Overall, I think, obviously, the banks have, their hands are tied, so they're, having to make do with what they can. This grant doesn't even help them in any possible way, because most of these other funds would have had to be gotten through the commercial banks rather than directly from the CBN. So the banks might have even been able to earn some interest income on any kind of, even if it's a low interest loan. However, a grant, like you said, attracts no interest rates, so the banks do not benefit from it in any way. However, I think,
Well, maybe if the R&D produce drugs and whatever, they will take the sales to the banks. But I know banks love the front end approach of making money.
Of course. I mean, because that is all speculative, Research and development, unfortunately, when you look at it, especially when it comes to pharmaceuticals, you sink billions and billions of dollars really into creating, one or two viable products that take testing for many, many years. And, in the end, some of them might not even get to the market. So if you have one drug that gets to the market, then you would have a bunch of different investors fighting, for a very, large piece of the pie. I think in terms of the banks, this doesn't benefit them directly, but obviously it will benefit the wider public and us, in the long term, if they are able to create drugs. And also, it's very important to note that I think when it comes to research and development, especially research in our academic institutions, I think, we definitely lag behind a lot of other developed nations, because, in the US and all these other countries, when you talk about research and development, their academic institutions are usually at the forefront of developing the newest medicines or the newest ideas or the newest technology, and we haven't gotten our academic institutions to that level yet because of a lack of funding.
Yeah, because that's why you have the youth. You have young ones whose brains are still very fresh and they're ready to go. They're not yet bogged down with so many. Some of them are issues. Many of them are singles. They're not married, whatever. So the brain is still at work. And if you go to some universities, you see what they do in agric research. Like you just be like for example, the University of Iowa. You'll be surprised, acres and acres and acres of farmland where they grow wheat and a lot of other things. They do biofuel. They produce all sorts of things. You'll be surprised. You think you're in an industrial estate rather than a university. But
absolutely.
So this is where we need to put our money. And again, this is our future, by the way. So I think it's putting our money where our mouth is, and our lives all matter, by the way. Ali's just smiling over there. I'm sure he's trying to. This is an issue across Africa, really. R&D across the university space.
Yeah, absolutely. And I looked at it in the context. I visited France to look particularly at this space, and the integration between R&D and corporate France is incredible. And I think that's a linkage we're missing in many contexts across the continent. And that's why we're not able to monetize in the manner that you were actually trying to touch on. There is a massive opportunity, but I think it means we've got to look at everything holistically and understand what our universities need to focus on and push them in that direction, and then give them the opportunity to monetize opportunities as they find them. I think it's something we are missing. I mean, Silicon Valley, for example, Barson, was largely built out of that university R&D space and monetized from there.
And you can see how it all flows down to New York,
Yes.
where you have the NASDAQ and the New York Stock Exchange. It's all end up in making billionaires and billionaires out of young folks, whether it's Facebook or Twitter guys or Microsoft, Bill Gates and Apple and the rest of them, Cook and the rest. So it all boils down, like you said, we need to have a holistic look at our universities and R&D and see how it flows into the corporate world. And the entire industrialization conversation around Africa really cannot be done without the university space, because how do you bring on the industrialization? I'm too old to be given a machine to work right now. You need the young ones who can fabricate the machine, who can think it through and who can make it work. That's the whole fourth industrial revolution for Africa needs to tie in the universities. You folks are really spot on. Where did we finish off in South Africa yesterday? Not a very good day for the GSC, 1.25% down. The currency touched a little bit of a lower point, 1771 against the US dollar. Meanwhile, Namibia will be selling about 60% in auction its own fishing quota for COVID-19 medicines and equipment. Gold is still shining, but again, there's a bit of a little luster on the metal this morning. Mozambique inflation ticked up to 2.0% in July, not significantly far from 1.7. The LNG project is still the shining boy of Africa's FDI as we speak. Ali.
So yes, you started with South Africa, a little bit of a wobble. I think that's also correlated with the gold price, which has dipped below 2,000. And was looking a little bit soft yesterday. I think this is a re-entry opportunity for people. If you've missed that initial gold run, nothing has changed. There's still rampant money printing, a great deal of uncertainty in the world. So I think that will be reversed at the JSE as well. With the Rand, I think that's of a set of weakness, some contagion from Turkey, where we've seen the Turkish lira slide to an all-time low, and we've seen weakness kind of spill into the Brazilian real and the Rand, and I think that weakness will remain there for the foreseeable future, and I expect the Rand to trade a bit more softly. Mauritius, this is this tragedy of this oil spill. Mauritius did very well with the coronavirus. We're looking to open up the economy in the near term, and then they've been hit with this mass pollution event just offshore. It's very, very unfortunate. Incredible response by the Mauritians in trying to throw everything at stopping it and bringing it under control. And we extend, and I'm sure all of us extend our sympathy to them right now. Namibia to auction 60% of its fishing quota. You might not remember, but there was a very big scandal about this fishing quota in an Icelandic company who made hundreds of millions of dollars and paid peppercorn money to get these quotas. So it's good to see that there's going to be a transparent auction process. This is a major natural resource for Namibia, and you know that's a positive development that I'm taking away. New Gold issuer delist 300,000 debentures. That's corporate action around New Gold. Mozambique CPI 2%, very soft, and in line with inflation, which so far is not rearing its ugly head, which is a good development. And I think that's also a result of countries like Mozambique having a strong agricultural sector, and it's food prices that are the big concern and the spike. For example, in Ethiopia, there's a significant food price spike going on, but so far, those countries that have reasonable agricultural sectors are doing okay. Kenya is the same. And then finally, the gold resources index, as you said, the JSE was soft. We had this 15-day run on gold where it went up every single day. This is a price correction in what I believe is a bull market.
Interesting. Thank you, Ali. The Nigerian space, as far as fixed income is concerned, is revving up a bit. Ayodeji, give us a minute quickly on the comeback of the Debt Management Office into the savings bond yesterday after it was suspended in April. What's your outlook on this?
Yes, it was a surprise, and we're excited that for the retail investors, again, we'll be able to participate in the fixed income market. However, looking at the yield for the 2 year around 3.1%, and for the 3 years around 4%, it's still is really very low relative to other forms of investments that for the retail guys could take advantage of. I know the idea of this is for investors to save for the longer term, and there's something interesting that as the DMO has put in place, which is the liquidity. So the market maker has been performing up to expectation, which also provide that confidence that you don't have to wait for 2 years. And also activities on savings bond have improved. However, we're not expecting much interest or subscription from clients at this very 3% and 4% locking on your funds, because if you are passive, you are going to hold to maturity, you may miss out from any upside potential in yields. So why would you want to lock your funds at 3% for the next 2 years? Which we don't see it going down. Assuming it was still high, you can say you are locking it in against any downside. But at this level, we don't see it going down significantly below this level. So for us, we're excited that retail investors as low as 5,000 Naira can participate, and your coupon is paid quarterly. That's interesting. So for cash flow purposes, very interesting. But on a return basis, we feel there are other even mutual funds that they can invest as low as 5,000 and earn better interest rates or return than the bonds.
No, I agree, because again, when you look at inflation now at the doorstep of 13%, if I'm getting 3 or 4% on savings bond for a year, I have a second thought about that. I might just think about something else. But then within the space as well, we find some bonds by corporates. Joshua, Nova Merchant Bank rolls out a program, which is this 3-year-old merchant bank is coming through. Why do you think these merchant banks are coming to the market at this point?
Well, I think it's all about capital. That's the truth, is that, at the moment, obviously the revaluation of the Naira, which, got worse last week, has sort of eroded a lot of banks' capital. Now, outside of the tier 1 and tier 2 banks, all the smaller banks, the tier 3s, are going to struggle in terms of, capitalization and, having to meet that capital adequacy ratio. So as we expected, we're going to see a lot more capital raising, either debt or equity. Obviously, the equity space is not ideal at the moment. So, we expect them to raise a lot more debt because the, interest rates are pretty favorable in that sense. So that's really just what it is. It's just a case of them shoring up their capital. Not all banks are going to be like First Bank that can, inject 25 billion into their commercial banking space. But, they will just have to make do with what they have, really.
That's 25 billion. Sometimes I think they should just share it among all the banks, because sometimes I feel, hold on a second, 25 billion for just one bank? That's a big shot in the arm, if you ask me. But again,
absolutely.
In North Africa, very quickly, Ali, give us your rundown of this for our North Africa space. Quite a very interesting story with El Gameya, the fintech startup, got about 6 digits in US dollars from angel investors. That looks like very good news. The Egyptian market authorities are reviewing the criteria for shares that are eligible for short selling. We have a program already within the Nigerian space. Inflation in Egypt, 4.6% in July. Then Algeria is giving some forward-looking warning about its gas exports to decline 26 to 30 billion cubic meters 2025, 2030. Ali, give us 60 seconds.
Okay, so this story about the fintech startup, there's tremendous appetite for investors to get involved in fintech. I mean, particularly accelerated by the COVID situation. The banknote is really something people don't even want to hold on to, because you think about how many hands a banknote passes through. EGX, this is interesting, and this is in line with what we're seeing across the continent, is basically permissioning short selling. It's a signal of maturity of African markets. Historically, we've been very nervous about allowing short sellers to come into play because, we got concerned that they'll get carried away. So I think that's a positive development in our capital markets, and I congratulate Egypt on taking that step. Egypt CPI 4.6% in July, pretty benign, but they are big importers of food, as you well know. But I think so far they've been able to keep that under control. Algeria, this is a pretty big number that they're talking about, a decline. This is an oil and gas economy, and that's really going to hurt the revenue side of the balance sheet going forward. We'll have to factor that in as we compute the macroeconomics for Algeria.
Interesting. I think we have quite a bit of ground to cover, but let's continue to run this through every one of you. Thank you so much. Let's hang in there for today. Thank you so much, Alikan Sachu in Nairobi. We appreciate your coming on the show today. Joshua Debisi from Vertiva Capital, thank you so much for your time. We're grateful. And of course, Ayode Jiebo, who is the CEO at Afrinvest Securities. Thank you also from Lagos. Thank you, gentlemen. Have a great Tuesday. I'll see you again later.